So the event will be recorded and the recording of the event will be shared with you. And if you are going to see the recording in the YouTube, then in the description section I will be giving the link to download this document. The document what I am going to present here along with the backtesting reports. If you want to access that document, the description will be having that link. And all of you are already in our GAN trader group. So if you are a member of this particular group, Telegram group, the document is already shared in the group, so you can download from there. And it is with all evidence, with all backtesting, it is being presented to you, and it doesn't require a in-depth study on your option Greek. It is a very simple strategy. Only you need to know how to initiate it and what is the processes are involved in this initiation. That much only you need to know. Once you know that, you can able to make money in this particular strategy. So before I should progress for the session, let me introduce myself. So this is Ranjan from Smart Finance, and you are joining me, or I am located at Chennai, and you are listening to me from Chennai. So here you can say this is me, how I look like. So I am joining you from Chennai, and Smart Finance is my company, and my profile is known to many of you. I am the author of 6 books on capital market. So my first book was Master's Key to Futures and Options, wherein I described many good concepts. So other than that, we in the Smart Finance innovated many new concepts. So we are not promoting or practicing the same age-old 1970 concepts. We have promoted or innovated many unique concepts in the intraday trading, in futures and option trading, like Z-score based system, beta decoupling based system, how to use the volatility in the intraday system, how to use volatility along with Fibonacci, how to use volatility in Elliott, how to use volatility in other methods, how to make the moving averages as a dynamic indicator. So there are number of research we have done, and it is, if you go on counting from the 2005 to till date, so our establishment happened on 2005, and 2005 to till date more than 40 new innovations we have done. More than 40 new innovations we have done, and we have decoded, simplified most of the WD GAN's concept into very simple way. So these are the achievement of Smart Finance till date. So you are listening to me, and you have learnt about Smart Finance. So it is a very old company. We have established in the year of 2004-5. So till 2023, we have been working on many new concepts. So when I say it is new concept, it must not be present in any book, and it should be innovated by us. So all these things are Smart Finance innovations. So you can say Z-score, beta decoupling, or any such methods. Those are our own innovations. So now today you are going to experience one such method, Batman option strategy. If you do a web search, you will know that what is Batman option strategy. So strategy everybody knows, but how to implement it, how to make it profitable. So regarding this particular strategy, I have given a video 5 years before. So if you just go to my YouTube channel, so just go to my YouTube channel here. If you just make a search, so here many new concept we are giving. So if you just make a search, zero loss, zero loss option strategy, so you will get many videos pop up for you, and all these things, zero loss option strategy techniques and zero loss option strategy at the time of high volatility. So similar kind of strategy I have given many times, and it is not now, 5 years before. So now you are in 2023. Much before that, it is being given. Same ratio spread, but name is not Batman. So Batman is a name surfaced much after that. So much after I have published this zero loss option strategy. So some people trickily they have given a name to it. So fine. So this is also our innovation which is being snaked or being stolen by some people. So since they named it, I do not want to contest with that. But there is a proof present in my YouTube channel 5 years before. And if you go through that video, you will know that the strategy what I am discussing now, Batman strategy, it is well presented 5 years before by me, but it is not being given a name. So fine. So anyway, benefit is more important, social cause is more important, traders welfare is a more important. So now let us learn this same technique from the original innovator. So it is originally smart finance innovations. It was not named as Batman. So yes, it is our innovation. So since it is our innovation, we know what is the best process to initiate it. And since it is being shared in the public domain in a different name, so I thought take that name and just tell how to implement it in a correct way so that all should get benefit of this particular strategy. Basically, this particular strategy of Batman strategy, it is a vertical spread arrangement. So there are three kind of spread. Those who are option students, they'll be knowing that horizontal spread, vertical spread, and diagonal spread. So it is a vertical spread arrangement, and in vertical spread arrangement are of two types: higher strike vertical spread and lower strike vertical spread. All your bull spread, bear spread known as your lower strike vertical spread. Whenever you go with a ratio, so means one strike you are buying, two you are selling, three you are selling. So those are known as your higher strike vertical spreads. So this is a technically it has two names. Why one is a higher strike vertical spread, another is a lower strike vertical spread? Basically, when you form a higher strike vertical spread, the objective is to make money from theta. So theta is your profit contributor. When you form a lower strike vertical spread, that time delta is your profit contributor. That's why to make this job simple, to make it easy for the trader to understand, the names are being given. Higher strike vertical spread, that means you initiate in such a way that it should be benefiting you from the theta. Higher strike, currently where you are going, where you are staying, so higher to that you can take, lower to that you can take. So lower strike vertical spread, whenever we are saying, we are confident on a trend direction, we are following that bull spread, bear spread, such kind of strategies. So that is two type of vertical spreads. So this is a very simple understanding. Now the profit and loss potential. So based on the strategy objective, when you form a strategy, you should have an objective. So you want to make money from a wild swing, or you want to make money from a consolidation market. You want to make money from a graded move, means step by step up move or down move. So that is the objective. But this is only your expectation. I want to make money from consolidation market. That doesn't mean that market is going to oblige you, obey you, and respect you. Market can change. You have a view, but your view will be supreme. That market cannot give you that guarantee. You have just a view. Based on that view, you plan certain things, but whether the market is going to accept it or not, that is the market's role. So here, Batman option strategy or the original zero loss option strategy innovated by Smart Finance, both are same. It is selling two vertical ratio spreads. So it can happen in two different ways. Either you can have a 2/1 ratio spread, you can have a 2/1 short ratio spread, market neutral strategy, call side and put side. Whenever you form any strategy which involves both call option and put option, that is known as a market neutral strategy. So you can have a 2/1 sell or short ratio call spread and short ratio put spread. That is one. Or you can go for the 3/1 ratio call spread or put spread. That also you can have. Why I should go with a 2/1 and a 3/1? Why can't I go with the 5/1? Why can't I go for the 7/1? Why can't I go for, you can say, 9/1, 9 lot to sell and 1 lot to buy? Why I cannot have that? So the reason is this 2/1 or 3/1 ratio spread, whenever you are forming, you are making your theta or the net theta of that strategy, it is plus or minus 5 rupees. Beyond 3/1, if you go and randomly you choose specific strikes and enter it, this theta will become imbalanced. Mostly it is positive theta. Theta plus only will come because 2 lots of selling is involved here. So 2 lots of selling is involved. So theta is negative for the call option as well as put option. So 2 lots you are selling or 3 lots you are selling. So theta is positive. Buying side theta will be negative. Net theta positive strategy it has. So net theta positive, if it is 5, then it is stable. Means the strategy will be stable. So you can make it 2/1 or 3/1 ratio spread combinations in call and put. So it will make the strategy stable. So till 8 it is okay. 5 is allowed. You can slightly go up 6, 7, 8. But beyond 8, dangerous. Means that strategy can either land in the huge profit in consolidation or can wipe out all your capital with no time. Because 2 lots of selling is there, it is exposed to the unlimited loss risk. So 3 lots of sell is there, so it is exposed to the unlimited loss risk. So for that reason only, these 2/1 ratio spread or 3/1 ratio spread is only allowed in the Batman strategy. Beyond 3/1 it is not allowed. So if you search in the web, sometimes you will find out somewhere it is written 2/1, somewhere it is written 3/1. But nobody has given you explanation of that, because in my zero loss strategy I have given this 2/1 and 3/1, but I have not explained it why it is 2/1 and 3/1. Since it is a copied resource, so they have not explained it. So that is how copy work out. So this is how the 2/1 ratio spread or 3/1 ratio spread is being arranged in this order, because it keeps the theta at a comfortable level, +5 to +8. Beyond that, it is dangerous. So this you understood, it is just a combination or it is just an arrangement of ratio spreads. So I have given an example here. So this document already shared in the group. You can say I am buying one strike call options when 2nd January 2023, when the Nifty is at 18,197, I'm buying 18,400 call option. I will justify it, why it should be bought, why it should be sold. There should be a justification behind it. So I'll be buying call option one lot, selling call option two lots. Here too also I'll be buying one lot of put option and selling two lots of put option. So this is what I'm going to do. So what will happen by this process? Buying one lot of call option, selling two lot of call option, buying one lot of put option, selling two lot of put option. This arrangement is known as your Batman option strategy. So if you graph it, it look like a Batman because that is a movie, English movie. Batman was there. If you graph the profit and loss, so what happens, there is a plateau like this and it maintains like that, so it is look like a Batman, so that's why it is named as Batman. They justified it. However, this is a zero loss strategy arrangement, but by nature it will not be zero loss. You have to make it, because if you just wrongly implement it, it cannot become a zero loss. It will give you huge loss because both the sides open. You have a sold the options which is unprotected, which is not being protected well. So that is how you have to protect your strategy in a good way. So this particular arrangement, if I am making in the 2nd January 2023, how it is going to work out in the entire month of January. If it is initiated at these are the prices is given, say you can say I am buying at 183 one lot, selling two lots at 103, so I am getting a credit of 208 rupees almost. So here also I am buying at 147, selling two lots at 97 each. So you can say here too also 200 minus 6, you can say 196 rupees I am getting. So credit I have received. So by this process, if I form what the rewards it has given me. So 2nd January I have initiated, no risk reward because the end of day it is initiated. If we assume 3rd January 800 rupees profit. So by this process, if you say every day some profit it is there and it has given a maximum profit of 5,000 rupees in the month of January if it is initiated in the first day, and minimum profit of 127 rupees. So main point here you have to see here is when this minimum profit of 127 rupees came, the day Nifty spot is at 17,859. We have initiated when the index is at 18,197 Nifty spot. It has come to 800 level. Almost we are at flat, or we may enter to the losses also. So now when it goes to the maximum profit, you can say when the index again back to 18,000 level. So this is how it conveys in the month of January. Similar thing if we are going to test in the month of February, what it is giving, or March what it is giving. Suppose I have given you a test report here, complete till January to till date. So I have given January to July. So January if it is being initiated, this is the profit and loss. February if it is initiated, this is the profit and loss, one day or enter into loss. March if it is initiated, rules I am going to define. March if we are going to initiate, so all these days enter to the loss, and one point of time also 4,800 loss is there. So these are the configuration says we must implement in proper way. If we do not implement in a proper way, or our strike choice is not correct scientific way, we will also land in loss, and that loss also should be a bigger loss. So that I am going to describe. So have patience and have a look at this. So here we have seen in the March we have a losses, and April also similar kind of losses we have seen here, and May also you can see that we have got a profit. June we have seen that there are smaller profits as well. July also you can see that in between we went to a loss. Again, once the market retraced back, we entered to profit. So July there is a good rally, 600 700 point rally happened. So this says something is missing here, so that some months it is going into the profit, some months it is in the losses, and some months it is fully maintaining the profit. So what is the secret behind that? Why some months it maintains the profit throughout the month, some months in between it is entering to the losses, some months initially it enters to the loss, then come back to the profit, then come back to the profit. So these are the things why it is happening from time to time. That is what we need to learn, and that is how we need to refine it. That is how we have to refine this study. So for that there is a specific rule is there. But most of the literatures, as I repeat again and again, it is copied literatures from our innovations. So most of these literatures, since they are copied literatures, they do not have a scientific method to tell you what is the entry rule and what is the exit rule. So today on 10th of August 2023, you people are testimony of these things. So maybe after few months or close to a year, in the same portals where you are getting the information about the Batman, the same entry rule, exit rule also will picture. So that also will picture. So that is also you have to be alert, so that Batman strategy, anyway it is being named by the people, so we are accepting it. But same time also I want that if that is being given to the people, people should know what is the correct way to enter this strategy, how I'll make a selection of the strategy strikes to buy, selection of the strikes to sell. That is very important, because if I do not do that, then my strategy will land in trouble. Second, if I enter to this strategy, then how I should come out, because every time it will not be a favorable thing for me. Sometimes unfavorable things also will come, market will move too quickly. So that time what is my take, how I should come out from that strategy. Second objective. Third, if we have entered to the strategy, since higher higher strikes are there which we have, or strikes we have sold, the selling side is more to make it theta positive, so we are exposed to the unlimited risk. So selling side is having more number of lots. If there is a huge up move or anything down move happens, then we'll be at a great problem. So to do that also we need to devise a plan for adjustment. All these three steps we have to go to refine, to make it as a zero loss model. Yes, in spite of all these efforts, still there is a chance we will be landing in a smaller losses. That also can happen. Second, now we have weekly options also with us. How we will implement the same strategy in the weekly options to make it profitable? So that also I am going to cover in this part of my presentation. So all these things step by step I'll go entry rule, exit rule, then we'll go for adjustment, then we'll go for weekly implementations of the strategy. So these my child is saying that he can make your concentrations high. So for that there is a small, you can say, there is a small it zero loss, it can be implemented in the weekly option also, but there is a entry rule for that. how you should enter this strategy. For that, you have to take the VIX into account, volatility index into account. So Nifty has the VIX, Bank Nifty doesn't have the VIX. So if you want to implement in Bank Nifty, you have to consider the Bank Nifty volatility, not the VIX. It doesn't have a VIX. So here, whatever the VIX based price you are deriving, so VIX based price, how will derive in a month, how many points Nifty is going to move. That video you will find it in my YouTube. So every month in the beginning day, on the day starting day, you can able to estimate how many points of depth between the high and the low it is going to be created in during the process of month, so that you can able to estimate. So here VIX based estimation you have to do, then 1/3 of this price range you have to take into account. Why 1/3? Why not 1/5? Why not 1/7? So here fixed based price range, once you derive, that price range will move in 3 different cycles. So for that, 1/3 of the price you have to take, add it to the Nifty, and then decide which strike call option should be bought. Subtract the same amount, get which strike put option to be bought. Once you derive the buying strike of call options and put option, your next job is to sell the options. So when you sell certain options, you take care in such a way that 100 to 150% of the buy value should be covered. So example, January 2nd January VIX and monthly price estimate was 766 point. So how this 766 point has come, that video you can refer from my YouTube channel. Recently I have given. So from there we are saying that 766 point of move is going to happen in the Nifty. But this 766 point of move cannot happen in a straightway direction. So this 766 point of move can happen into 3 different cycles, means rising cycle, falling cycle. So that will propel this move. So 1/3 of this thing we are taking price range, which is coming to 255 points. So 255 points, round it off. So it is some decimal will come, you can round it off. Now call strike we have to decide. When on 2nd January, Nifty is at 18,197, add it plus 255 point. It is coming 18,452. Means we can buy 18,400 call or 500 call or 450 call also we can buy. Anything nearest to that. For 450 will have lesser liquidity, go with 400 or 500. Same process, if we subtract, we are getting 17,942. So we can buy 17,900 put or 950 put. Now we have decided which strike call to be bought, which strike put to be bought. Post that, we need to sell 2 lots of this other strike, which will cover 100 to 150%, not more than 150%. 100 to 150% should cover. And I have told you, you can take 3 by 1 or 2 by 1, anything you can take. So what we are going to do here, say 17,400 call we bought, and we have sold 17,700 call 3 lots. So how much we are spending here for buying? 183 rupees. How much we are getting here? So it is 150 and 225 rupees if we are selling 3 lots. So 183 rupees we are spending, 225 we are getting. That means more than 100%, and 100% is 183 rupees. Then beyond that, another 30-40 rupees we are getting. Maximum 100 to 150%. So what we are doing here, carefully understand this. Whatever the buying value we are getting or giving to the market, 100 to 150%, that range of the premiums we are receiving through the sale proceeds. Why we do this? If we do this, then only our theta will come to positive 5 rupees, 5 rupees to 8 rupees range. That is our job. So why not we have bought 18,200 call and sold 18,300 call? Because if you do it here, what happens? You are selling more number of lots. So if market penetrates, quickly move beyond the upper strike, like 18,700 or 17,500 below it falls, then that strategy will land in unlimited loss. So this gap we are creating using the VIX, we are assuming 766 point of price move is expected as per VIX. One third of that we are taking, and one third of that part we are taking and buying the strike. Then we are creating a gap, higher strike, OTM strike we are selling, and we are receiving a premium of 100 to 150%. This can be implemented in two ways. Here two lots you can sell also. So by this, if you are making two lots you are selling, then obviously you cannot go to 18,700, it may be 18,600. So this is how you should implement this strategy. It is a implementation rule is this. One third of the price expectation as per the volatility index you have to take, factor it with the current Nifty price and choose the strike of purchase. You have to choose the proper strike of purchase. Then you have to choose a strike for sell in such a way that in purchase whatever the premium you paid, 100% to 150% of that purchase value you should receive from your sale proceeds. Now question comes, it become by this proceeds is become more number of sales has come, more number of, so more number of sell side has come. So we have to devise a exit plan also, because here we are selling more number of lots by making theta as positive. So whenever you make theta positive, that time you are adding more risk to your strategy. So for that, either you should have a adjustment plan or you should have a exit plan. So for that, exit rule is what? Say in this particular case, what we did, our 18,700 and 18,400. These are the two strikes for call, and 17,900 and 17,500. These are the two strikes of the put. You take the mid of this, means you add both, divide by 2. You add both, divide by 2. That should be the that mid value of call, mid value of put will be your exit point, whether profit comes or not. If Nifty, which is now at 18,197, if it comes to 18,550, you must exit. If Nifty, which is at 18,197, if it comes to 17,700, you must exit. So why this mid value? That also has a logic. Whenever we form a short ratio spread or ratio spread, when you buy, means the selling side is more, when you form short ratio spread, the underlying asset price, the moment it comes to the mid value of 18,400 and 700, that time delta addition happens in the upper strike call. Same way, when it fall to the mid value of 17,900 and 17,500, delta used to take into effect here. This OTM strikes, which will be having 95% or 90% probability of expiring out of money, this upper strike 18,700 and 17,500, which is having more than 90% probability to become out of money, they have that reduces to 50%. Means they have 50% probability of becoming out of money. So any option which is having 50% probability of becoming out of money, it is delta sensitive. Means delta will start adding, so you can get more losses. So before that happens, you should come out. You must tell me here, I have initiated this strategy. If tomorrow there is a huge gap up, if there is a huge gap down, what I should do? You have to take that loss. So if there is a huge gap up happened 18,550 above, there is a huge gap down happened below 17,700, then also it is a danger case. So you can say in those days definitely you will have losses. For that, another things is there. Whenever you initiate this strategy, keep in mind the VIX should be less than 20%. VIX should be less than 20%. That is ideal condition. If VIX is more than 20% and you are using the entry rule properly, if VIX is more than 20%, but your entry rule is maintained here, because entry rule is 1/3 of the VIX based price range. If the VIX is more, price range will be more. Instead of 766, you will get 1500. Say VIX is 80%. 80%. So what will happen? Instead of 766, you will get 1500, or you can get 2500. So 1/3 of that will be too big number. So the strike what you are buying and strike what you are selling, based on the VIX it will adjust itself. That will entry rule, if you obey properly, that can create little bit of protection for you. However, this is a more number of lots are being sold, less number of lots is being bought. So for that, what is very essential, that exit rule you must know. The strike what you are buying, strike what you are selling, the moment the price comes to the mid of these strikes, the underlying asset price comes to the midpoint of this, that particular period you have to come out. But if there is a huge gap down in the sense, currently Nifty is at 19,000, 18,200, and expecting that to touch 18,700 means 500 point gap. That may not happen. It's a remote possibility, remote chance, but chance is there. So since chance is there, we must devise a plan for adjustment. Means we should do in such a way that even though if there is a gap up or gap down happens, that particular time we must be protected. So we must be protected. So we'll move to the session. I told how you should enter, how you should define which strike I should buy, which strike I should sell. If it is clear to you, then exit rule also have a look. When we should exit means once this particular price comes, we should exit. If underlying asset comes to this level, we should exit. Now question comes, when I should exit rule means there will be specific losses will be there. That time I should accept that loss and come. What will be the ideal case of making a profit? So here I have given a complete thing. January we have taken every day some profit is coming. So January we have taken this thing and some profit is coming. So to January I have taken 2/1 ratio. There are some profits are coming. Again I took 3/1 ratio. There are some profits are coming. When I should book the profit and come out? Mostly these are the strategies. If nothing happens, so you can say, so these are the, if nothing happens, so dramatically it is no big gap up, gap down, nothing happens. What will happen? Mid of the week only it will give to the profit. By 15th of month, mid of the week it will give the profit, and then the profit will escalate. So profit will increase from there. till the end of the things. So here mid of the week the profit comes and it move to the higher levels towards the end. So best time to initiate this strategy, maybe in the first week of your settlement. Settlement month starts, you initiate in the first week, and then mid of the week you should book the profit if it is theta is decaying. But theta is not decaying that time, longer period of time also you have to wait. So here, or employed capital, whatever the money you have employed, in that 2 to 2.5% if it comes, or 1 to 2%, I used to always say 1.5% to 2% on your employed capital, means whatever the margin you have paid. So on that, the moment you get this 1.5% to 2%, come out of this strategy, book profit and come out. Now you have seen that 2 by 1 ratio spread, short spreads how behave, 3 by 1 ratio spreads how behave, entry rule what is, exit rule what is, then adjustment. What is the adjustment? If we are doing this particular configuration, means we are buying here one lot, selling 3 lots here, and here too also we are buying one lot, selling 3 lots here. So that's some adjustment we need to do, so that this strategy, if there is a huge gap up or gap down happens, we should be protected. So for that, what I am doing, this is a short ratio spread, add a long ratio spread, add a long ratio spread, same depth you add. Suppose 18,700 you have sold here, one more here you add more, and you go for 17,900, 3 lots you can take here. So here 105, 20, so 25 rupees of investment you can do more here. Same process in the put side also you do. So what will happen by this process? The extra lots whatever is there, it will get nullified. So lot wise you will not have the problem, only depth wise it will have a problem. If there is a huge gap up or gap down happens beyond your tolerance level, the midpoint of your level, so at least you will get some time to come out of this strategy. So you can say here I am buying one lot, selling 4 lots here. So here -4 I have and 1 is plus. So if I add 3 more here, buy 3 more, so lot wise I am 0. So lot wise I am 0. This process also I'll make it 0. And what will happen? My theta will not distort because I am going again out of money. What I have done here, currently at 19,000, 18,197. So what I did here, so this is out of money I am selling. So 3 lots I was selling, I sold one more lot, and further some out of money I bought 3 lots. So yes, by this process what happened? Some 25 rupees of debit I have given here, 25 rupees of debit maybe I have given here. So by this process, or 40 rupees debit I have given here. So this debit I have given as a protection cost, as a pre-adjustment cost. So by this process, I made it pre-adjustment. So if I do this pre-adjustment, what will happen? My profit loss also will reduce. So my profitability also will reduce. So how we can check it? Many of you are be having this particular software. So this particular software, those who are our clients, those who are having our softwares, so they will be having this testing software. So this particular testing software, we have designed to test any particular strategy. So here I'm going with the adjustment. So whatever we have discussed, same thing I'm doing here. 18,400 call option, I'm buying one lot, and here call option also I'm selling 18,700, selling here 4 lots. I'll go with the pre-adjustment model. So already I have shown you that 1:3 how profit and loss it is giving. Same process I am going for a put option, and that too also you can say 17,900, put options 17,900, 17,900 I am buying one lot. Also I am going with the same January put option of 17,700. So this I am selling Instead of 3 lots, I have sold 4 lots. So now what I have to do? 2 extra wings I have to add here. I have to add 18,900 call options. How many lots? 3. So the lot wise I am nullifying it. Whatever the number of lots I sold, number of lots I bought, it is nullified. So my margin also will come down. So by this process, here 700 put option. So 17,500 put option. I am buying here. How many? 3. So here 1,578 rupees I have got it here. So I am paying remaining. So remaining money here 90, 105, and I am 75 I am getting. So remaining I have. So by this process what will happen? My profit which I was seeing at 13,000 and 12,000, it has reduced to a great extent. My profit has reduced. Why? These two legs what I have added, that has created a damage. So that has created a damage. But this is why I added. It is a pre-adjustment principle I added. Pre-adjustment. Along with the strategy, I have taken it so that in case of a huge gap up or gap down, though it is consolidated, we got a profit. However, if it has not consolidated, what would have happened? So I would have landed in loss. So you have seen that month of July, 2023 July, there was a loss in the back testing I have shown you. So there was a loss in the July. So let us clone the same things and see if we have done this pre-adjustment, then whether the month of July we would have landed in loss or we would have landed in profit. You can see here month of July which was showing a big losses. Here you can say to a great extent the losses has been reduced, also the profitability meant reduced. So pre-adjustment pre-adjustment whenever we are forming that particular time, these are the steps we have to consider. So whatever the number of lots I am buying here, extra lots I am having, I can just suppose instead of 1 is to 3, if I 1 is to 3, if I am going for 1 by 2, then what will happen? Here 3 lots it will happen, here 3 lots it will happen, and this also don't require, you don't require 3 lots, it is 2 lots, and 2 lots you can do. This is not a only method to. So here you can say that it is small losses has come, so that is not giving any profit. So not only this, so what we are adding here, if there is a 3 by 1 ratio spread is there, 3 by 1 ratio spread is there, then I am telling you, you also add a 3 by 1 ratio spread here. By this process you can do. Suppose you do not want to do that, what next process we are having? Many different ways we can do. Suppose you do not want to do that, you are telling that no, I do not want to take any ratio spread here. So what I will do, only after 18,700 I am incurring the losses. So what? So this is my original strategy. So what I will do, only after 18,700 I am incurring the losses. So can I make that this 18,900 as a sell and make it as a 18,800 as a buy? So can I make this one bull call spread also? You can add 18,800 you can buy. This also you can buy one lot, and 18,900 one call you can sell. Same process you can here sell this one and buy a put option of beer put spread also you can buy 17,600 only. So here also you can buy. So by this process, one bull call spread and bear put spread also you can add. So this process what will happen, but still you have a extra wing open there. So bull call spread, bear call spread also you can add it here. So profit loss you can see there is a visible changes will be coming here. So many different ways you can do the adjustment. So that is not a rule that it should be added with one ratio spread. It can be added with some other strategies also. However, I can say here, if you are following the entry rule and exit rule properly, do not have a adjustment in the beginning. Rather, wait. Once the things comes adversely, you change the strikes, accept that smaller losses, and go on changing the strikes. That will be a best choice without making it complex, without making it that much of invisible. You can go with the model of changing the strikes based on the market situation. Fine. So that you understood about this adjustment, how it can be done. Objective of adjustment, our number of lots what we have sold, that should not be unprotected, that should be hedged. So that we can do in many different ways. So weekly option also you can add in this, because suppose this is monthly options cost is more, so you can add a ratio call spread and put spread in the weekly options. That will cost you less. So 1 week you have waited, second week you have waited, third week you have waited. Once your strategy gives you profit, so some part of money you have to sacrifice, but still your strategy is protected. That also you can do. Now coming to the weekly strategy, when you initiate this particular strategies in weekly, that time it is quite complicated. Why complicated? Why the same strategy which works for monthly option does not work for the weekly options? The reason is the weekly options are a different instrument. Monthly options are different instrument. Monthly options are known as plain vanilla option. Plain vanilla option. Weekly options are known as exotic options. So exotic options. So have a web search. What is plain vanilla option? What is exotic option? Plain vanilla option obey all Greek fundamentals. Delta you can able to calculate, vega you can calculate, theta you can calculate everything. When it comes to the exotic options, same formula will not work out. The delta formula will not work out, vega formula will not work out, theta formula will not work out. Why? That is also a reason. In monthly options, IV normally will never go above 100. Greater than 100 IV, it will not happen. Weekly options, it is possible to have 100 IV above. When IV goes above 100, that time we are telling delta also can go above 1, can fall below -1 also, which is plain vanilla option says that delta is maximum 1. It cannot go above 1 plus 1. It cannot fall below -1 for the put options. Future delta is 1, but exotic option doesn't obey that. Exotic option says that my delta can go above 1 because IV is above 100. IV is going above 100 means delta can go above 1. Same way, delta can fall below -1. That is the difference of the exotic options. Once exotic options you are dealing with, what you have to do? You need to trade very carefully in this, and you need to devise a different plan for that. What is that? Every weekly options, whenever you are applying that Batman pattern here, 1 week gap you have to give. Suppose today it is expiring, or there is, we are taking on the 2nd January, 5th January is the expiry. So we are going 5th January, we are not taking anything, we are going for next week. So current week you will not have the strategy, you will be having the strategy in the next week. And how you should form that strategy? So here you will be having 2/1 ratio spread, or 2/1 credit ratio spread. Similar way you have to form in the higher strike, you have to form 2/1 debit ratio spread. So here credit ratio spread, make it as a Batman. So debit ratio spread, it doesn't make it as a Batman. I can name it as a inverted Batman. So when it goes with a credit Ratio spread, you can say it is a Batman pattern. When it goes to same thing in the debit, you can say it is a inverted Batman. So what we are doing here, whatever the earlier case, what adjustment I have suggested, if you take the similar kind of adjustment here, so your net lots count will be 0. So this is why it is essential. The reason is this is a weekly option, is a exotic option. Exotic option cannot be taken in this order. So what will be the profit and loss liability? So I will show you an example here. So here, if we are going to take for the, so this is a, you can say this is one of our tool which is under development now. So here, this is for weekly options. Whatever that example you have seen here, same thing I will be showing it here. Here in the Nifty lot size is 50. We are taking it, and weekly options we are going to form. So weekly option, exotic option. We cannot take a chance there. It doesn't follow the delta rule. It doesn't follow the vega rule. It doesn't follow the theta rule. So how it should be? So weekly options, I'll be taking 12th. When I am taking 12th January, when I have my date is 2nd January. So 2nd January, I am taking for the 12th January. And strike choice, you can see same kind of strike choice I am getting. Same kind of strike choice. Choosing the strike, call option I have taken, same 18,400. 18,400, I am buying one lot. Same 100% logic. 12th, I am call option. So I am going for whether 500 because 100% I required. So 18,550 I am selling here. So 100% recovered the premiums. So here again put option. I'll be going for same way of my 17,900 or 18,000 I can go. Slightly 200 point if I can go also, it is okay. So here weekly options, I'm not going to hold it for a long. So here too, what we are going to do, options, and these are the very sensitive studies, required a lot of patience, and we require 100%. So I am going for 900. I have taken 850. It is done here. This part is over. Now next part, I have taken 550. Same process I will be following here. Call option 18,550. This I can put in one place, but it will create confusion. So for that, I'm just making it separate. So selling one lot, and I am going for, so 400 to 500. So another, so call option, why it is being done weekly basis. If there is a huge up move happen, we'll be in trouble. So 550, we can go for 650 and buy two lots. One debit call spread, debit ratio spread, and call and debit ratio spread in put, and other credit. So here 550, here 850 also I am going put is 850, 17,850. This what we are doing, we are selling it. So keep posting your queries. At the end, I will take your queries. So here put, also we are getting 100 point gap, we can give 17,750 by two lots. See the profit liability in this. So here, this is the profit, and each leg what is the profit and liability it gives, you can see. So these are being taken weekly options. There is hardly, there is a small change happened here, 18,197. Next day it is 233, fallen to 18,000 level. Your profit goes to 4,000. Again it is coming to a level here. So maximum 9,000 it has given. So P sell Noinazi is telling put should be sold. So let me, 18,850 put is being sold. Here it is sell. So I made a mistake here. Sell two lots. here 850 sell, buy, sell, buy. So whatever we have done here, so these particular things if you see here, so what we have got it here, max end of the on the 12th Jan we are getting 6k profit. Maximum we have gone to a loss of 55 rupees. And see the promise in the last day, last expiry time, our gain has come to 6,117 rupees. This is highly promising in the highly promising highly margin is the same as your monthly strategy. Whatever margin you will pay there, same margin you can pay it here. So here normally for this particular one lot, 3-4 lots, I do not know what will be the margin will come. That you have to inquire with your broker. So however, I can say that couple of trades what I have initiated, whatever I have initiated, these particular things I used to do of my own very aggressively. Many times I have done. You can say Batman weekly patterns. So this I have, this is you can say just yesterday I have taken for 17th August. 17th August I have taken, and you can say what was the profit and loss. So it was given, this is the quantity, this is the quantity, which is what I did here. I stopped a different way. So here 2/1 ratio spread debit, 2/1 ratio spread debit I am taking, here 2/1 ratio spread debit I am taking, and here quantity same, but quantity is double. So here same 2/1 twice the quantity. So this is your Batman. So this is Batman, this is Batman. So by this process, and what is this combination is Batman. So whatever the Batman is there, half the quantity I am taken in the ratio spread, that will also lower the strike. So not the higher, not beyond 750, lower strike I have taken. So this has landed in 17,000 profit. Similar also one more model today also I found. Don't think that it is every day give profit. So today also I have formed here in 19,500, and I exited when it has 19,630. So hardly some 100-point move that gives this kind of benefit. So 16,000 gain, 16,700, it could give little more also, it can give slightly more also, another 3-4,000 also it can add. So 1,778 rupees will be your brokerages and taxes. That may vary for you, taxes and other things is same, but however brokerages can vary for you. So similar process you can say also I have taken today, also I have taken today, also I have taken here. So you can see here, so today also there is a thing I have taken here. So this particular strategy is there, you can see here. So this is also same Batman pattern, which is at a 3,845 rupees loss. Why it is loss? I have initiated when the Nifty is at near to 19,600 level. So 19,600 level. So I will be landing on a profit when it goes to 19,700 or Nifty comes to 19,500 below by 20-30 rupees. So the points, so I can maintain the profit. So since it has not happened at 3845, loss is there in these things. However, it is at sub 500 level, so you can say slight move happens, it can convert to a profit also. So same Batman pattern with pre-adjustment technique. So why it is having it twice the quantity? Reason it is a very low volatility market now. So that process I take slightly more risk. 500 quantity I have extra. So if you do not want to keep it, you just keep all, nullify your positions. In this model you follow, this too also will give you the profit. Whatever the monthly you get, here also you will get the similar profit. And for this, I think the margin requirement for this initiating this, it comes to 1.5 lakhs to 2 lakhs. So this will be the ideal margin which can cover this entire positions, whatever you are seeing here. And it has a promise to give you near to 2%, यानी कि 3,000, near to 3,000, 2,500 to 3,000 rupees of profit potentiality it can generate per week, because it is weekly options. Every week it can generate with a plus or minus 100 point of move, plus or minus 100 point of move from your positions. So suppose you are initiating at 18,200, it goes to 18,300 by weekend, all on the day of expiry, or it comes to 400 by the end of expiry, then you can get that 1.5% to 2%. Slightly goes more, 150 points, 175 points from your base, so you can slightly get more profit. Or you can say end of week, if it comes to 19,000, 18,450, or goes to here 17,950, hardly 200 point profit will be maximum. So this you can get, this you can get in weekly basis also. Every week you can able to make the money. It is also a risk neutral approach. So video will be there, document is being given to you. You can very well see in this what is written here. You can start paper trade from tomorrow in weekly options. Paper trade. So 1 week you observe, 2 week you observe, 5 week you observe. Then if you are happy, you can take it. So that depend upon how you observe. But here two kind of people cannot do this particular trade. Who are those people? Intraday mindset people cannot do option strategy trade. Those who are highly occupied in intraday, they cannot make it. Those who are allergic to mathematical concepts, they cannot do these particular trades. Those who are not satisfied with smaller 1.5%, 2% gain per week, they cannot utilize this thing. So these are the very important things you can consider. So you can, the day you are entering to this strategy, Manisha ji asked whether I should take weeks into account. Definitely you take weeks into account. The day you are forming this strategy, on that day what is the weeks? Based on the weeks, how many price point is moving? So 1/3 of the price is suggesting which strike to buy, which strike to sell. So that weekly options you can take. 1 week you give a gap. Suppose 12th you are expiring. So 12th you are having the expiry. If you are on 2nd, take for 12th. So if you are on 12th, you can go for 17th. So 1 week you give a gap. So that what happens? You need the market to move by 200 point, 150 point, 100 to 150 point. It will create a return. So that move, if it doesn't happen, you will get a smaller return or a smaller loss. If that never happens, it is good only. If it doesn't move beyond 18,400 or fall doesn't below 18,000, it is good only. You will get smaller profit. Smaller profit will come. So this part liability will be taking a, you can say, bigger part of the money it can take. So that time your profit may cease to small amount or zero. But in fact, if it is going to 18,450 or 500, or if it is coming to 17,950, 17,900, 150 point, 200 point move happened, it is giving you the same return. Monthly options also offering the same return. For entire month you will sit for 5,000 rupees. Here 1 week you have to sit for the 3,000 rupees. So choice is yours. So whichever is, it is, I used to say it is a good strategy for the weekly trades. And in a single day, if there is a 100, 150 point move happens from your base where you entered, so that day itself you will get the money, you can come out. So that is how जो सॉफ्टवेयर के बायर्स थे, जिन लोगों ने सॉफ्टवेयर का रिन्यू किए, उनको हमारा ये टूल फ्रीली दिया गया, ये ऑप्शन स्ट्रैटेजी टेस्टिंग टूल. This option strategy testing tool is given to all of the people those who had a software and they renewed it. जो लोग active user नहीं है, they did not renew it, we cannot give them free, because reason for developing it, it takes lot of resource, people get salary, people work for that, so that's they used to get. So for that, those who are the loyal customers, we rewarded them, we have given them. एंड ये टेस्टिंग टूल बहुत बढ़िया टूल है. यू कैन टेस्ट एनी स्ट्रेटेजी ऑफ योर चॉइस, एनी स्ट्रेटेजी ऑफ योर चॉइस you can test. So this particular strategy, what I have found here, you are seeing here 12 January, how it has worked here. Just see, monthly also you have seen, weekly also you are seeing. 50 रुपया का लॉस में मैक्सिमम गया था, 6000 का प्रॉफिट दिया वीकली ऑप्शंस में. वीकली ऑप्शंस में इट हैज गॉन टू 50 रुपया लॉस, 6000 प्रॉफिट. इट इज फॉर जनवरी. यू कैन गो ऑन टेस्टिंग फरवरी, मार्च, अप्रैल, मई, जून, जुलाई. यही एक्सपीरियंस मिलेगा. द प्रोसेस ऑफ एंट्री इफ इट इज करेक्ट, then you will get the same result, similar result, same result without any deviation. प्रोसेस ऑफ एंट्री क्या है वो समझना है. क्या है? भिक्स से जो भिक्स है वो भिक्स को लेके प्राइस रेंज डिफाइन करो, उसका 1/3 लो. तो आप अभी क्या करोगे? मंथली के लिए मंथली प्राइस रेंज डिवाइड कर रहे हो. वीकली के लिए क्या करना है? इफ इट इज फॉर मंथली, यू आर डिवाइडिंग 776 रुपीज पर मंथ. सो आपको तो वीकली करना है, आपको वीकली डिवाइड करना पड़ेगा, उसी हिसाब से स्ट्राइक का चयन करना पड़ेगा. तो by this process, if you do that, so just see here 18,200 was there, so he has taken 18,400, 18,000, 200 पॉइंट का गैप में वो लिए हैं, उसको तो मान लो. that also you can do. So that is any ways, if you just see the example what is given here, that also sufficient. If that also sufficient, if you do weeks based calculation, wonderful, that is more than sufficient, that is more than scientific. आपने सीखा, काम पे भी लगाया. एंड 1.5 लाख से 2 लाख में अगर हफ्ते में 2000-3000 निकल रहा है, इट इज नॉट ए स्मॉल मनी. यू कैन earn more than that. So you can say this can give you more and more. स्मार्ट फाइनेंस का एक ऑफर भी चल रहा है. those who are wants to buy all our software along with the courses. ये कोर्सेस ऐसा कोर्सेस नहीं है कि जैसे कि यही कैंडल स्टिक को रटते रहो. दिस आवर कोर्सेस आर एंटायरली डिफरेंट. वोलाटिलिटी को कैसे यूज करना है, भिक्स को कैसे यूज करना है, ये. सो वी आर गिविंग दिस इंडिपेंडेंस डे ऑफर ऑल आवर सॉफ्टवेयर्स. देखिए ये ऑप्शन का जो स्ट्रैटेजी आप देख रहे हैं, ये सारे सॉफ्टवेयर आपको आ जाएंगे. ऑल आवर सॉफ्टवेयर along with all our unique courses is at a very small price, 9,999. 10,000 रुपया आपके लिए आप खुद एक्सपेंडिचर कर सकते हो. दिन में अगर 10,000 रुपया लॉस ही कर दे रहे हो तो 10,000 खर्चा करके कुछ तो सीख लो, कुछ तो सॉफ्टवेयर सॉल्यूशन ऐसा डालो जिसमें कुछ तो पॉजिटिव आउटकम आए. सो at least the software solution what you are using for your decision process, you should know that yes, it is giving real time volatility basis, it is giving you the calculations. A proven fact hai. This is a company which is existing from 2004 to till date. बहुत सारा कंपनी का तो एड्रेस ही नहीं मिलेगा आपको. there is no address. there are उनका वेबसाइट खोलोगे, उनका एड्रेस देखोगे कि एक फॉर्म निकलेगा, फॉर्म में डालो, हम बात करेंगे. देयर इज नो एड्रेस. दिस पर्टिकुलर कॉन्सेप्ट व्हाट यू हैव लर्न, आई टोल्ड यू हाउ इट इज बीइंग कॉपीड. 5 साल पहले जो स्ट्रैटेजी हम जीरो लॉस स्ट्रैटेजी बना के दिए थे, उसी का नाम बदल के लोग बना दिए. सो आई हैव टोल्ड यू दैट 5 years before, whatever the strategies that given, that particular strategy, people have changed their name and make it their own. Okay, it is good, they made it popular, but they do not know what is the correct process of entry and exit. that I have explained in this webinar. At least the correct information should go to them, go to the people. Let it be bad cat, anything. So, but thing is that the correct informations or correct way of using that thing should go. So this is what the smart finance does. So our Independence Day offer, you get all our stuffs at a very low price. So this is, you can utilize this opportunity, and those who are having the software, that too also we have given them the message in thousand. They have, if they have dropped, not utilized, or they did not renew, they can pay 1999 and renew their softwares. That also you can do. So here 9SG is telling this is the implementation for the next week. So he has made a calculations. So he made a calculations, and based on the weeks, and he is giving you that. Let me put, so quickly 9SG has made the calculations, and he has put it in that what should be the ideal weekly strikes uh, we can utilize. Here 9SG is telling this thing. Note, those who are not trading also, at least do a paper trade. What it is telling for next week: 19650 call buy, 850 call sell 2 lots, 450 put buy 1 lot, 19200 sell or 250 sell 2 lots. That is for next week. Adjustment is compulsory here, so you need to do a adjustment. So where you have to do the adjustment: 850 you are selling 2 lots, so you have to sell 850 call option, one more lot you have to sell, adjustment, and buy 18,950 call 2 lots. That is for call is got adjusted. For put to adjust, what you have to do: 19,250 put option, what you are selling 2 lots, sell 1 lot more you sell, and buy 19,150 put option 2 lots. So this adjustment also you can add. This is the original strategy, Batman strategy, and this is the adjustment, inverted Batman strategy, you can say. So by this process it is adjusted. Do this trade for the next week, for the 12th of August expiry. For 12th August expiry, keep a note, keep these things, do a paper trade, and margin your broker can tell you. If you take this trade on tomorrow, by 12th, what you are getting the result, you convey me. Whether profit came or not, whether what it has given or not. If tomorrow you are implementing what it is giving, you have to check that. So this strategy, if you initiate, how it works. So that is based on the week study. This is the choice has been made. Once this choice is being made, so Naneshji has told tomorrow make one small this thing, and make these things should be there. So stock options में मत कीजिए उसमें. So do not do in the stock options. So this is what he has done. Also I'll request them do a paper trade in this strategy, Batman strategy, with adjustment for coming week, and see how it gives. So it is not for 24th expiry, it is for 12th of our August. Today is one expiry is over, 17th expiry. This is for 17th expiry. This strategy is for 17th of August expiry. 17th August expiry. Yes, this expiry happened. So 17th expiry you can take, 24 August expiry also you can take. 1 week गैप देना चाहते हो तो 24 भी ले सकते हो. दोनों को स्टडी कर लो क्या होता है. 17th expiry also you take, 24 expiry also you take. पेपर ट्रेड तो कर रहे हो, पैसा थोड़ी जा रहा है. तो पेपर ट्रेड जो कर रहे हो दोनों हफ्ता को लेके पढ़ लो, कुछ तो सीख जाओगे एटलीस्ट, समथिंग यू शुड लर्न out of that. So this is how you should take a Batman strategy. Entry strikes very important, exit principles very important. If it is taken in the weekly options, pre-adjustment is essential. You have to do the adjustment from the beginning itself. If you are doing in the monthly options, you can skip little bit because wider range will be there, so you can skip. But weekly options you cannot take a chance. किसी को So this is a theta profit gain strategy. Theta 5 rupees, which is definite gain going to come to your pocket. Only delta risk is there that can be managed through the pre-adjustment or post-adjustment process. How to choose the correct strike to enter this strategy, how to sell the strikes in such a way that you should get a proper theta. So that is the only catch. Entry rule, exit rule, profit rule. These three things you have to consider very seriously. If you are doing with weekly options, pre-adjustment is essential. You must adjust it before so that you can strategy will go profitable. So 2 weeks, do paper trade. I have also given for the whether it works or not. काम कर रहा है तो इनिशिएट करो, उसके लिए कोई पैसा देना भी नहीं पड़ रहा है. If it is working, initiate. If it doesn't work, ask me, that I will tell why it did not work.